Good morning, everybody. It's Tuesday, May 13th. Namaan here, joined by my colleague Jenny Rae for another edition of Market Outsiders. It's another big news day. If you follow business and economic news, the latest CPI print just dropped. We've got the inflation numbers for April coming up hot off the presses for you. Before we dive into that, Jenny Rae, do you want to say hey to the folks?
Good morning, everyone. We're really excited to chat today. We're also going to go just a little bit wild and not talk about inflation for the whole time today. We're going to talk about McDonald's, which we talked about last month. That was kind of part of our we don't think inflation is going to rise conversation. We're going to tie back to what the heck might be going on with McDonald's if it's not inflation. And we're also going to talk just really briefly about Nissan as well. Looking forward to diving in today with you, Naman. You want to kick us off?
Let's do it. So again, I think everybody knows if you've listened to us for any amount of time, we don't bury the lead. So I think the lead of today's news is inflation. And so I just pulled up the Wall Street Journal here. Wherever you get your news, inflation's probably going to be the top headline. And so, what you see here is a headline that is true, but maybe not the entire truth captured in one headline. So what does the headline say? It says monthly inflation picked up in April in midst of tariff swings. And so that is true. Consumer prices rose 0.2%, but the number that I pay more attention to, and I think that the Fed pays more attention to, is core inflation. So core inflation excludes volatile food and energy prices because there are just such seasonal swings in those categories, regardless of what's going on macroeconomically. And so when you look at CPI, core inflation, that was up 2.3%, lower than the March gain of 2.4%. So I think when you look kind of beyond the headline, what you see is, okay, we're about where we were a month earlier. Overall inflation a little bit up, core inflation a little bit down, but we're where we were. And I think that this kind of lends credence to, honestly, a little bit of what I was saying last week around kind of what should the Fed be focused on more, right? They have a dual mandate, if you remember. It's keeping inflation at around a 2% annual rate, and it's keeping unemployment low. And so this is just another sign to me that the employment battle is now kind of the bigger battle for us to fight versus the inflation battle. Doesn't mean you ignore inflation, doesn't mean that, it's like fully put to bed. It just means that we're on, it seems like a trajectory to get us to that 2% target. Now, this data doesn't necessarily include, what's been taking place in terms of tariffs, because, Liberation Day happened in April. And so this data doesn't fully capture the effects of Liberation Day. But again, a lot of those tariffs were put on pause, including the tariffs that we instituted on China. So if that shows up in the data, I think it's going to be a blip. And this is welcome news for inflation watchers. Jenny Rae, anything you want to add to that?
Well, I want to add them on. I didn't pull it up on my screen because I'm going to share a picture of McDonald's, but but I've got a different headline, same news, and I just think it's really important to highlight why it matters for y'all to have your own perspective. Because if you want to become a trusted advisor, you can't just parrot other people's information. You have to go at least one level deeper, usually more than that, in order to have a perspective that you're sharing with other people. And when you're walking into the room, you can't say, just did you see the inflation news? Because the inflation news is not the inflation news. The inflation news is a headline that ties to data that means different things for different organizations. And if you know how it's going to have cascading effects, it's going to matter. So I was going to read out a different headline just to highlight this today, Naman. CNBC today had annual inflation rate hits 2.3% in April, less than expected and lowest since 2021. So yours was we have rampant inflation, and mine was we have negative trending inflation. And if you don't understand what the core numbers are saying, it actually looks like there's something totally different going on. The numbers are the same, the interpretation is different. And we work with hundreds of individuals that come to us every year and say, hey, I walk into a room and nobody listens to me. You want to know why? This is why. Because you read the headline, but you don't understand the deeper implication for the organizations that you work with. Or you share all the data. You're like, core, you read the numbers that Naman read, right? The 12-month inflation rate is 2.3%. Nobody cares. All they care about is why this matters for me. Is inflation going up or down? Is it going to impact my prices? Are eggs going to be more expensive? If I buy a car tomorrow, is it more than it is today? Like the impact on people is really affected by these numbers, and you're missing out on it. And when you do, you're not actually being listened to inside your organization. So it was kind of fun to just think about how I could just imagine a number of the people that we worked with before we worked with them wandering into a room and reading out this news in a very different way than we would recommend you guys understand it today.
I've gotten a lot of questions from our clients lately. I've been on a lot of podcasts lately where I've been asked, how do I build executive presence? And one of my answers has been, you learn to emphasize what's most important for the people in front of you. That's executive presence. And so that's a little bit even about of what these headlines are doing, is they're emphasizing what they think their audience will care about most. And so one headline emphasized the rise in the inflation rate, however slight it was. The other headline emphasized that core inflation is at its lowest, rate in 4 years. And so, a part of executive presence for you as an individual is to walk into a room and be able to answer these three questions: Who's my audience? What do I want them to do, and why will they not do it? And so, the answers to those three questions will then help you determine, okay, what's the story that I need to tell? In a business setting, your goal isn't to prove that you did a lot of research. Your goal isn't to prove that you are right. Your goal is to move people to action. And so when your goal is to move people to action, that means you don't have to share all the data, to Jenny Rae's point. You have to first identify what your key takeaway is and then find a storyline that's going to move people towards some kind of action or some kind of belief. And so I think, to Jenny Rae's point, as you look at the headlines, that's what some of these publications are doing too. They're trying to get you to feel something, they're trying to get you to believe something, and they're emphasizing certain parts of the data to do that. And your job as an advisor inside of any organization is honestly to do something very similar.
I'm going to take my insights from advising some of the largest business in the world and highlight them today. This news on inflation is, I think, very interesting because it was, as this title said, expected to be higher. It was expected that we would see the price increases. What we saw in April, that I think is not reflected in the market, is a large repricing of expectations. And when we saw yesterday the losses that happened in April erased, the understanding, I think, of the markets, not the economy, the markets, and really I'm going to separate the two of these today, is that we're back to business as usual. Everything is as it was as of March 31st. Nothing has changed. And I just want to kind of lay out there that that's not true at all, not true in the conversations that I'm having in the private markets, and definitely not true in the consulting sector. We are absolutely seeing a increased and sustained level of change in external markets. So while this feels a little bit like a breath on tariffs, I do expect we'll see inflation increase. I do expect that we will see a rise in prices brought on by costs. I don't think it will be as dramatic as some of the doomsdayers would have said because we are a services economy. But I also think that there is there are price increases coming, not necessarily because tariffs are coming back, but because the threat of tariffs is now real. It was on the table. It exists. And so people are going to price in a hedge for themselves because the last thing that you want when you're walking into a store, especially of something that you buy frequently, is to buy it at one price today, a different price tomorrow, a third price on Saturday. That's what really loses consumer confidence. And so companies are going to start to increase prices, expecting a mix of tariffs in their pricing supply chain. And then they're going to look to see if they can sustain those with consumer demand. And so I expect that we will see an impact of inflation that has not yet been seen in this data. What about you, Naman?
I'm going to take the other side of that.
Because you
I
believe it, or just because you want to be spicy? Come on, because
because I
I'm fine with
believe it.
either.
Yeah, because I believe it. So I fundamentally don't believe that these tariffs are going to stick. So, like the fact that we've, made the contours of a deal with the UK, the fact that we've agreed to negotiations with China tells me that the administration is willing to play ball with the rest of the world. And so, like, I think what the market has priced in is that, like, we're not going back to tariffs after 90 days. And I don't believe that we are either. And so I don't have data to support that it's a belief. I think a lot of the markets are supported by beliefs as well. Like you're reading people, you're not just reading numbers. And when I read the people, and when I just kind of read some of the statements that are coming out from the administration, I don't take seriously the threat anymore of permanent tariffs. And so because of that, I, I don't expect inflation to rocket back up. What I do think lends credence to your case is that we're still at pretty full employment. And so as long as the consumer's strong, as long as people have jobs, they're going to continue to spend money. And so, if that demand remains sustained and, supply is constrained because of uncertainty, okay, you could see prices go up a little bit. But I think it's going to be a pretty marginal increase. That's my high level, simple take on where I think inflation's going in the next 3 to 6 months. But as a business owner or someone who would be affected by tariffs more directly, I'd have to be planning for a world and an environment where I would have to raise prices because I'm already beyond like the tariffs were paused for 90 days. Well, I did my planning for 90 days from now a long time ago. Like I'm already thinking about the fall, the winter, and early next year if I'm an importer or a manufacturer. And so while the reprieve is welcome from a business owner's perspective, I think they have to price in the worst case scenario. I don't think that's what the markets are doing though.
So here's what I want to say. I'm actually not anti-tariff or pro-tariff. I think that tariffs as a foreign policy tool are incredibly effective. And what I want to say here is that I think that what the market is pricing in is no tariffs ever. And what we were pricing in before April 2nd was no tariffs ever, right? And then I think the kind of wild swings that we saw in the market in April were pricing in not even all, but some of the definitely tariff someday. And I think where we are is like maybe tariff someday. If we're somewhere in between in terms of pricing. The pricing in the market is showing us back to no tariffs ever. And as I'm talking to business owners, they're not thinking like that. They're imagining that there are going to be some tariffs some way, someday on something. And they're thinking about how they can manage their supply chains. They're thinking about what kind of pricing power they might have. And they're likely going to test it regardless of whether that impact hits them in the near term to see if there are some ways that they can kind of, focus on capturing price in a strong employment market. So like I agree with you that we're not back to where we were, and people will think that we're unlikely to see tariffs, but the potential of tariffs has really changed the ball game for a lot of business owners and
I think
planners.
it's definitely changed. It's definitely changed the game for business owners. Um, I would push back on the fact that the stock market's pricing in no tariffs, right? Because on March 31st, they didn't know what was coming down on Liberation Day. So they had priced in tariffs, they just didn't know what they were pricing in. And when the markets tanked, I think they
Fair.
realized, right, they hadn't priced in enough of the tariff impact because the announcement was higher than they expected. So I think if we're back to pre-Liberation Day, I think we're back to pricing in baseline 10% tariffs. I don't think we're back to pricing in zero tariffs.
So what I want to talk about now is just to swing back to this because the McDonald's news that we read to you last month was, hey, amidst consumer concern, McDonald's posts low prices, right? The headline was the headline, and we're looking at the headlines and saying, hey, I don't know if I necessarily believe that. Well, I went to McDonald's last night. It was my son's spring concert, and afterwards, something my parents did with me was we always went out as a family after spring concert, stayed up past our bedtime and did something just to chat about the concert. So my 8-year-old picked McDonald's, and so for the first time in kind of a long time, we went in to sit down at McDonald's, and what I found inside the store I thought was super interesting. Okay, so what were you gonna say, Naman? Looks like you were gonna.
I was just gonna ask you what made you decide to go in? Like why like I'm curious because I just feel like everyone goes through the drive-through now. So is there a play place? Like what was the impetus for actually walking in the
This
store?
is the thing. This is what I want to highlight because I don't usually go in. Usually, if our goal is eating, we are either doing curbside pickup, and this isn't only at McDonald's, or we are running through the drive-through. Right? I'm just like I need to get the kids something to eat. I was going to say something nutritious, but they took salads off the menu. How can you call it that?
I noticed
So,
that. Yeah.
something to eat, and then like let's go on to the next thing. But the whole purpose of last night was like I want to connect with my kids. I want to sit down with them and talk about the event. My son like was kind of hilariously doing zero of the hand motions on the stage. I was curious which of the songs was his favorite. Like my kids talk to me when we're eating, but that's basically it. They're either playing or reading or doing something else. And so that was what my parents did with me. It was kind of, I thought it was a fun idea. So that's why we went and sat in. Well, this is what we found, right? So this is the backside. This is from our seat. But first of all, there was one other group inside McDonald's. And I have never noticed this before, but we are also Chick-fil-A patrons and we also go to other places. McDonald's is one of the only places where no one is eating in. And I thought that was kind of interesting. Like in Chick-fil-A, a part of their model is having the family eat in. And so at Chick-fil-A, you'll have 10 to 20 tables. At McDonald's, there was one other one occupied. Um, but also, it took me, Naman, probably like 15 to 18 minutes to order our order. And it was not that complicated. But they had no way for me to order at the counter. And one of the things that we've talked about doing on this podcast is connecting the dots. I want to connect two dots that are absolutely not related, but might be related. I was also at Walmart last week, and I do a lot of my grocery shopping now at Walmart. Walmart and the Walmart app has really gotten me into that. So sometimes when I'm already going to Walmart to pick up my groceries, I'll go inside the store. I think that was a strong case for trying to capture people's grocery share because Walmart has definitely captured more of my spend in the process. Our Walmart in Northern California removed the self-checkout stations. There are no self-checkout stations anymore and everything is back to counter service. So here's how the dots may not at all be connected. Loss, right? If I was losing a ton of merchandise through the self-checkout station because people were walking out without it, not scanning it appropriately, not scanning the right quantity of it, et cetera, then like, yes, that is a loss and that's a real tangible loss and it might not outweigh the labor savings that I have. But what I thought was very interesting is that the other thing that could tie it together would be the speed through the checkout and also the throughput, how many people you can check out at a specific time. And so if I were, the CEO of McDonald's, I haven't looked at this data at all. I would love it if somebody wants to look at it and send it to us and tell me I'm wrong, because being wrong is also to me as interesting as being right. But I wonder if you were going to tease out not just same store sales, which could mask this data, but in store and drive-through sales, because drive-through is going to be largely the same amount of throughput that you'll see. It's just ticket sizes are the main thing that you can handle, but you can actually handle more capacity inside your stores. And that capacity is being completely unutilized right now at McDonald's, and it is being utilized in other peers inside its class. Not all of them, but some of them are definitely driving some of the same changes. So anyhow, that's one of the places that I would look. I thought the experience was incredibly poor. It was really difficult. It was still $25 for me to get a couple ice creams and a burger for the one that was hungry. And like, just overall, I left with zero connection to McDonald's, a lack of a desire to go back and go inside. And I just thought, based on the headlines that we saw last month, if I were the CEO, what would I do? I think that you could say, hey, we see softening consumer demand because of inflation, because of consumer confidence. Every single number that we've shared over the last couple of weeks has not showed that consumers are with their wallets feeling the pain. So I think that this is one of those places where I would look somewhere different than other people are looking.
I think that's fascinating. I'm sure McDonald's breaks out, transactions and revenue by those different, channels. I know what they've really been focused on lately is mobile app orders.
Yeah.
And so I think a part of this is to funnel people to use the app. And, you know, I, I would imagine that their transaction costs are the same whether you use a kiosk or the app. But I think that there's some stickiness factor when people order through the app and order through their phones that McDonald's is trying to capture because now they can send you push notifications. I think there's research that shows that when you buy something through an app, X number of times, then you're, X% more likely in the future to continue to order right from that company. So I think what they're trying to do is they're trying to own the customer relationship, not in store, but on your phone. And I think some of that has come at the detriment of the in-store experience.
But
And you know,
I'm arguing that like you may be seeing it in the numbers too, Naman.
you
I
might
don't
be.
disagree that that number is there, but then you like just think about it, the peer, right? At Chick-fil-A, you have zero digital ordering. They have incredibly fast throughput. I'm always adding stuff. So I think you may have smaller ticket sizes when you have more control and a slower process that you're walking people through. Because even though you can push me offers and notifications, I don't know that if I'm not standing in store with a kid pulling on my jacket, that I'm not ordering. I feel like at Chick-fil-A, I'm going to order maybe $10 more for each
Yeah,
order.
that's
Um,
interesting. I'd want to see because my hypothesis would be your mobile orders would actually be higher ticket sizes. So
I
that's data
know.
I'd be interested to see.
But maybe I don't grab a soda because I already have one in the car, or maybe like, when people aren't looking at all of the merchandised options, they're not thinking about what they want. Or, I don't know. For the first time, I was just thinking like the old way may have worked for reasons that we didn't understand. And it would be important to tease out more of the data in order to get there.
And if this is like a secular trend, right? Like if this isn't just something that's cyclical, then I think, if I'm McDonald's and I'm thinking about like my retail footprint moving forward, I'm starting to have the same conversations that I think Starbucks is having, which is
That's
are
where I
we a,
was going to tie it to. So I'm glad you
right?
went there.
Like are we a coffee house or are we a coffee pit stop? Right?
Yeah.
Are we a
Are we a drive-through shack or
yeah,
not? Yeah.
right? And I know that like a big part of McDonald's kind of book value is actually its real estate.
Yeah.
Like it owns a lot of the land that its restaurants are on. But is there a way that it could more efficiently utilize that space and that land? Like, could you actually have like just five drive-through lanes and like a big kitchen instead of wasting time with tables that nobody's occupying? Perhaps like that might be the McDonald's of the future. And we might be starting to see some of those signs and not just in your anecdotal experience, but in some of the numbers that McDonald's has been reporting as well.
That's right. But it's also possible that like the McDonald's experience of the past where you had a play place and an in-store experience, there were cost challenges of operating stores like that, but some of the revenue detriment could also be there. So I think the holy grail is trying to unlock one, full capacity restaurant or one zero capacity restaurant, right? So
Hmm.
the blend seems to be the big challenge in operations for McDonald's right now. Well, enough about hamburgers and ice cream. The markets
You're
are
making me
open.
hungry.
The business day has kicked off. We'll let y'all get off to it. There's more to talk about. We didn't even talk about Nissan's cuts. Let's talk about it tomorrow. It's not actually economic driven, and I think that's part of the interest of it. So more to talk about. More news will be available tomorrow. Thank you for joining us today. We look forward to being with you for future messages and conversations on Market Insight.